Hi friends, welcome back to my channel. In today's video, we are going to solve A-Level Accounting Specimen Paper 2023, Paper 4. First, this is the insert. They are given the details. In the examination, you will get two papers. One is insert, the other one is question paper. Here I have combined both to give the solution. So this is the insert for question number 1 and this is the question paper. So first let's check the source in the insert. W Limited uses budgetary control system to prepare the budget for the month of May. The directors of W Limited estimated a production of 1200 units and fixed overhead 30,000. 1200 unit. The fixed overhead for these units are 3000. They are given material budgeted price, labor and fixed overhead to be charged to products on the basis of direct labor hours. Fixed overhead will charge on the basis of direct labor hours. So when the labor hours change, the fixed overhead also will change. Here, the actual number of units produced and sold in May 1120. They are budgeted 1200 but actual was 1120. The actual and budgeted unit selling price was the same for budgeted and actual selling price is 135. So let's see the question. First one, state 3 advantages of using a budgetary control system. Budgetary control system will help the management to prepare the budget and they can control the cost and coordinate using this budget. It will motivate the employees. It will help the business to take decision making. So let's start. Setting target. Setting target for each department to achieve. They know what they have to achieve for each department to achieve. Then 3-mark question. So we have to write 3 points. Motivating managers and employees. They will get the clear idea. Motivating the managers and employees towards objectives. Because they will get the idea what all the work they have to do and how can they achieve their objectives. It's easy. Third one, helping decision making. Help in decision making. For example, pricing. Clear? Then question number 2. Prepare statement to show total flexed budget. What is flexed budget? When the business prepare the flexed budget? Flex budget a business prepare when there is a change in the unit of actual unit. Here the budgeted unit was 1200 but actual unit is 1120. So by using the actual unit and budgeted price, these are the budgeted price. So we take the unit only, we take the actual unit. Prices will take budgeted price. Then we prepare the flexible budget. We make the changes in the budget for the actual unit 1120. So the first one, sales. Sales. What was the actual unit? Actual unit is 1120. Budgeted was 1200, right? Multiply the price has given. Actual and budgeted price, they are given in the question. Actual and budgeted selling price 135. So we multiply actual unit with price. What is the amount? 151,200. Next we have to deduct our total cost, variable cost and fixed overhead. So direct material less direct material. Direct material is 1120 multiply. What is the material price? Material 2 kilo per kilo is 12. So multiply 2 multiply 12. 2 multiply 12. 26,880. 26,880. We have to deduct. That's why we put in the bracket. Next, direct labor. The same method we follow. 1120 multiply labor per unit and price given. The direct labor per unit 4 hours, $15 per hour. So 4 multiply 15. 4 multiply 15. What is the amount? 67,200. Next, fixed overhead. Because as per the direct labor hours, fixed overhead also will change. Fixed overhead was fixed overhead 1120, 1200. The fixed overhead was 30,000. So for 1120, what is the fixed overhead? Fixed overhead 30,000 divided by 1200 multiply 1120. What is the amount? 28,000. So we deducted everything. Now the flexible budget profit is equal to 29,120. Clear? Next, additional information as given. Actual cost incurred for May were as follows. These are the actual cost. Direct material, direct labor, fixed overhead, and the kilo used material, total material used and total labor used. So actually is entirely different. Now calculate the following variance. Direct labor rate. Calculate the following variance, the difference between the actual and budgeted. So how to find? The equation is actual labor hour into budgeted price actual labor hour multiply budgeted price minus actual cost. What is the amount? Actual labor hour into budgeted price. Actual labor hour is, let's see, Actual labor hour used 4,424 and the budgeted price of the labor hour. The price of labor hour is given 15 per hour. So 15 and the actual unit 4,424. 4,424 multiply the budgeted price 15 minus actual cost. What was the actual cost? Actual labor cost is 67,466. 67,466 is equal to 66,360. It was the budgeted unit 66,360 minus 67,460. The cost has increased. How much the cost has increased? $1,106 has increase in cost. That is not good for the business. So we are calling adverse. You put in the bracket A for adverse. You must make sure you put in the place of adverse you put A, in the place of favorable you put F, or you can write adverse or favorable. Then only you get the full mark. Next, D, direct labor efficiency. Calculate direct labor efficiency. So the labor efficiency, how to calculate the labor efficiency? Actual unit into budgeted labor hour per unit into budgeted price and budgeted labor price. First, actual unit multiply budgeted labor per unit, budgeted labor per unit multiply budgeted price minus actual labor hour multiply budgeted price. Labor hour multiply budgeted price. So let's see. The actual unit 1120. 1120 is our actual unit, right? Multiply budgeted labor hour and price. The budgeted labor hour and price given here in the insert. 4 into 4 and 15. So 4 multiply 15. 4 multiply 15 minus then actual labor hours multiply budgeted price. Actual labor hours budgeted price is 15. Actual labor hours given. Actual labor hours is 4,424. So 4,424 multiply 15 is equal to 67,200 minus 4,424 multiply 5, 66,360. So now the labor efficiency as per the budget it was 67,200. Now that is 66,360. So that is less. 840 is less. So we can say that is favorable. You put in the bracket favorable. Next, fixed overhead expenditure. The fixed overhead expenditure. What was the fixed overhead? Fixed overhead was here the fixed overhead was given 30,000 was given. It was given, fixed overhead was given 30,000 and minus fixed overhead expenditure. Here how much it comes? 29,500 is the amount. Fixed overhead is 29,500. So the difference is 500 favorable. The cost has decreased. We can see before it was given in the question 30,000, but in the actual it is given 29,500 has given. So the cost has decreased 29,500. So that is cost decrease means that is good for the business. Favorable 500 favorable. Next, fixed overhead volume. Fixed overhead volume, the fixed overhead was 30,000, but the labor hours we used, it was how much was the labor hours in the actual we used? That is we already calculated in the flexed budget 28,000. The first one was given the expenditure, but here it is the volume. Volume means 28,000 is used. Volume 28,000 is used. So the difference is 2,000 advice. 2,000 advice. Next, additional information. The directors have identified that there was an adverse total direct material variance of $420. Prepare statement to reconcile the flexible budget profit from B with actual profit. Already we are done the flexible budget profit. So that is we have to reach into the actual profit. We have to get what is the actual profit. So here the material variance, they are given in the question, that is 420 material variance has given. So we have to start first flexed budget profit. We have to get into, we are starting with the flexed budget profit and finally we get the actual profit amount. So flexed budget profit is equal to flexed budgeted profit. Flexed budgeted profit, already we calculated the flexed budget. What is it? 29,120. So 29,120. Next, total direct material variance. Total direct material variance 420. 420 is the variance advice. So we put in the bracket 420. Next, direct labor rate variance and direct labor efficiency variance. Direct labor variance and labor efficiency variance. Direct labor rate variance, direct labor efficiency variance. That we have already done here, rate variance and efficiency variance. The rate variance was 1106 advice and efficiency variance was 840 favorable. So 1106 that is advice and 840. So the total is minus 266. So we are done. Material we done. Labor we done. Next what? We have to check the overhead expenditure variance, overhead volume variance. So overhead expenditure and overhead volume variance. Overhead expenditure variance, overhead volume variance. Overhead expenditure variance and overhead volume variance we are done here. Overhead expenditure variance 500, overhead volume variance is 2000 advice. The other one is 500 favorable, then volume variance is advice. So 500 F favorable and here also we have 2000 advice. So the total is 1500 minus balance. Now what is the total? Actual profit is 26,934 is the total. So let's check. Our actual sales was 1120 multiply selling price is 135, right, minus the actual cost. It must be equal, then our answer will be perfect. The actual cost is, total cost is 124,266. 124,266. This answer will be equal to our total done. We are already calculated the total of this. So if this both are equal means your answer is perfect. Hope you are clear. So let's move to the next part. Additional information. W Limited received order for goods to supplied in June from 3 customers. They have a customer A, B, C. Unit ordered 300, 700, 400, different selling price. Then the budgeted data for May for the production of 1 unit remains valid. However, W Limited has to pay an overtime premium 75% to workers for production when if it's excess 1100 units. If it's excess 1100 units in a month, each excess production they have to pay 75%. W Limited is considering two options. Option 1, accept order for 3. Option 2, accept order of A and B. Here the total order is, how much is the total order? 1400 unit. So they can go with 1400 unit, or if they are going only with A and B 300 and 700 thousand. That is our question. So let's do. Advise the directors which option they should choose. Justify showing appropriate calculations making reference to non-financial factors. So let's do. Let's show with the work option 1 and option 2. Option 1, then option 2. So the first one, sales. Sales, we have 300 into each one sales we have to do. How to find this sales? Each one. 300 multiply 135 plus 700 multiply 130 plus 400 multiply 132 is equal to how much it comes? 184,300. So the first one comes 184,300. But if we are following only A and B, we will remove the C part. So only we add A and B. So the A and B only the selling price total is 300 into 135 plus 700 multiply 130, 131, 500. Are you clear? 131, 500, 131,500. So we are done our the sales. Next, material, direct material cost we have to do. So material, direct material, option 1, total unit is how much? Option 1, total unit is equal to 300 plus 700 plus 400 is equal to 1400. 1400 multiply. What is our price? 400 multiply. This is the price, material price. 2 into 2 multiply 12. So total is, if we have taking 1400 multiply 2 into 12. If you are going only with A and B, option 2, we have no C. So it will come 300 plus 700. So 1000 multiply 2 multiply 12. So how much it comes? The material, the first one is coming 33,600. The second one without C customer, that is 24,000. So we write material 33,600 while only A and B 24,000. Next we have direct labor. Direct labor, the first one 84,000. If we are producing the direct labor, that is 84,000. Direct labor hour. $1,200 unit. The total amount is, total units they need 1,400. 1,400 for 3. But out of these 3, 1,200 only we can give at the actual budgeted price. So 1200 the amount is 1200 multiply the labor hours. Labor hours, budgeted labor hours given in the insert. Budgeted labor hours are 4 hours multiply 15. 4 hours multiply 15. 1400 into 4 into 15. Total is option A 1400 multiply 4 multiply 15, while option 2 it will be 1000, right? Option 2 means how many units? That is 1000 only. 700 plus 300, 1000 multiply 4 into 50. So option 1 84,000 as per the budgeted price we are doing. Be careful. Then 60,000 for option B. But option 1 we have 1400 if there is the production for more than 1200 unit, they will pay 75 percentage of premium. So the premium amount for, they will give the premium. What is the price? The price is 15. So 15 multiplies 75 divided by 100, 75 percentage. So 15 multiplies 75 divided by 100 is equal to 11.25. They have to give extra unit. Total unit was 1400 minus 1200. Extra unit is 200. So for this 200, they have to pay 200 multiply 11.25 into 200 multiply 4 into 11.25. 200 each unit. How many hours was there? 4 multiply 11.25. 9,000 overtime also they have to pay for option 1. So option 1 unit 84,000 as per the budgeted price 15. Option 2 60,000 and the premium is 9,000. Hope you are clear. So direct labor hour 84,000 at budgeted price 15 and per unit for 60,000. But they have to give the premium. Overtime premium 9,000 for option A. We already calculated that 9,000, right? So now we have to find the contribution, which is give more contribution. So here we deduct this all. Contribution for option 1 57,700. Contribution for option 2 47,500. Which is giving more contribution? Option 1 giving more contribution, right? Option 1 is giving more contribution. Next, we have to address the directors, which is 1. Option 1, the full capacity is used, right? So we can write option 1, the full capacity used. There is the full capacity and workers are more happy. They will get the overtime. Workers are more happy because they get home overtime. overtime payment. Option 2. No overtime, so workers which will no overtime is given, which will improve the efficiency. Spare capacity can be kept in reserve of other urgent, because we are not using the full capacity, some spare capacity is there. Okay, so spare capacity, they are not used, so they can be keep, the spare capacity can be kept in reserve. They can kept in reserve for the other urgent orders. For other urgent orders. So they can, the option 1, they are using the full capacity. Here still they have some balance, they can use for other orders. And 2, no overtime. The no overtime which will improve the efficiency. No overtime will improve labor efficiency. So we are done. Question number 1 we are done in paper 4, question number 1. Hope you all are clear. If you have any doubt in the calculation, please put in the comment box. Thank you.